Are you making these 3 rookie mistakes that could cost you thousands when investing in real estate? If your loan officer doesn't own an investment property or your bank only offers one option and you're sticking with the lender where you deposit your paychecks, this video could save your next deal. Let's talk about the most common financing mistakes real estate investors make and how you can avoid them before it's too late. Hey there, I'm Mauricio, a mortgage broker who works with real estate investors all over the country. I've helped hundreds of clients build their rental portfolios, flip properties, and scale to 6 and 7 figure real estate businesses. And I've also seen the mistakes that slow them down or completely derail them. So today I'm breaking down 3 mistakes I see investors make over and over again when financing their properties, especially the first few, and what you should be doing instead. The very first mistake I see is using the same bank where you keep your money. This one is super common and totally understandable. You've got your checking, savings, and maybe even a credit card at your local bank or credit union, so you walk in thinking, they know me, they'll take care of me. That bank may only offer 1 or 2 loan programs. They don't specialize in investment property loans, and they rarely understand how to calculate rental income properly. What you end up with is limited options, higher interest rates, and loan officers who don't even know what DSCR or ARV means. You want to work with a lender who has access to multiple programs, not just one. One size does not fit all in real estate investing. Mistake number 2. Working with a loan officer who's never invested themselves. If your loan officer has never owned a rental property or never flipped a house, how can they advise you properly? You wouldn't take diet advice from someone who's never gone to the gym, right? So why trust your real estate deals to someone who doesn't understand what it means to carry a mortgage and pay contractors and chase tenants? Real estate investing has layers. You want someone who understands what it means to write off depreciation, someone who knows how to structure cash out refinance, or calculate cap rate and ROI with you on the call. So when your lender thinks like an investor, they'll structure your deal to maximize profits and not just get the loan done. And finally, mistake number 3, choosing a lender with only one option. Banks are limited, and most retail lenders only offer conventional loans, which means that they'll ask for your W-2s, look at your debt to income ratio, and make you wait until the last deal seasons before you buy again. But if you're serious about building a portfolio, you need DSCR loans that don't require income verification. You need to have access to fix and flip loans with rehab funds built in, asset-based options for scaling faster. A mortgage broker with access to dozens of lenders will match your situation with the right loan strategy every time, not just force you into a cookie cutter box. So stop trying to fit your investing goals into one lender mold and start working with someone who actually builds around you. So how can you avoid these mistakes and get set up the right way? To start off, don't use your personal bank just because it's familiar. Don't work with a loan officer who hasn't walked the talk. And don't limit yourself to just one lender. Instead, connect with a mortgage broker who's also an investor, someone who's built relationships with multiple lenders and knows how to get creative with financing and can walk you through the process from offer to closing. You deserve to work with someone who treats your goals like their own because they've been there. So if you're ready to stop guessing and start growing your portfolio with financing strategy that works, let's talk. Book a call using the link in the description. I'll walk you through your options and help you avoid these mistakes before they cost you another deal.